So here's something it's just been bugging me about the investment world. Your investments are making everyone else rich except you. Your advisor gets paid whether your portfolio wins or loses, and those sneaky 401k fees, they just keep stacking quietly in the background. And then the market experts tell you to just hang tight while inflation is constantly eating away at your gains. Meanwhile, there's a group of people earning 20 to 30 to even 40% returns, not from risky startups or crypto, but just boring, cash flowing real estate that is hiding in plain sight. And these people, they don't even have to manage these assets. So the question is, how are they doing it? And why aren't you? So let's break it down. Most high income earners, they have an aversion to loss, so they play defense when it comes to money. You've been told to diversify, so you buy index funds and REITs and ETFs, and then you cross your fingers hoping for a 7% return every year before all the fees are taken out. And maybe that sounds reasonable. That's how everybody else is doing it, right? And that's great until you realize inflation at 3% just ate up half your return. And then you realize you're not compounding, you're just treading water. I was just talking to a tech executive from Austin, a brilliant guy. He's built 2 companies and he makes great money. But when we looked at his portfolio, his diversified investments, they just kept pace with inflation for the last 5 years. And he was exhausted. And he was like, Jimmy, I feel like I'm working harder than my money is. And this is the problem with the traditional system. It's designed to cap your upside and it does nothing for your downside. And there are so many middlemen, the fund managers, the brokers, the custodians, and they all get to take their cut first. You get paid last and you get what is left over. Those seemingly small fees, they all compound the same way your interest is supposed to do. And that's why people who play by the safe rules, they never really build real wealth. They're sitting and waiting for their money to grow instead of straight up engineering that growth. Now, most investors assume 30% returns means you gotta gamble. That means house flipping, short-term rentals, or the next big thing that everybody's talking about on YouTube and Instagram. And that's just not true. The real wealth from real estate comes from structure, not speculation. Because when you buy right, you finance right, and you manage right, you can double or even triple your returns without having to swing for the fences. That same tech executive I mentioned, he was avoiding real estate because he thought it meant taking huge risk and becoming a landlord, and he simply doesn't have the time. But here's the thing, if you can lock in great financing and your property cash flows, it appreciates, and it gives you tax advantages on top, your real yield actually explodes. And this is not a get-rich-quick scheme. It's a get-rich-efficiently scheme. And these assets, they're hiding in plain sight. But now here's the other thing. Knowing all of this and actually executing on it, those are 2 different worlds. That's why I recorded a detailed walkthrough that breaks down exactly how our investors are earning 30% plus returns without managing a single property. It shows you how we find the deals, how we finance the deals at preferred rates, how we handle the rehab, how we place the residents, and how we manage everything after closing. What do you gotta do? You just gotta bring the capital. Me and my team, we build a portfolio. So this is completely free to watch. You'll find the link right below this video. So if you've been sitting on cash and waiting for the perfect investment, this will probably change the way you look at money forever. But let me first show you why people never see these kinds of returns. Because it's probably costing you more than you think. Here's where high earners really get burned. They join syndications and partnerships and funds, and they think they're investing in real estate, but they are and they kind of aren't. They're kind of funding someone else's business. Those groups take fees, markups, and profit splits before you ever see $1. I mean, your money's working, it's just not working for you. That's what we call dilution, and it's absolutely the silent killer of investor returns. So that tech executive I was talking about, he put $200K into 2 different syndications over 3 years, and his average return, it's about 8%. Not terrible, but nothing really special. He would have been just as good putting it into an index fund. But when you're the owner, you get 100% of the rent, 100% of the appreciation, 100% of the tax advantages, and 100% of the benefit of using other people's money. When you're a B-class partner in a syndication, you get the leftovers. So that's why our system exists, to make you the owner without forcing you to have to do the work. You keep all the upside, we handle the execution. We perform the services you're gonna have to hire no matter what you do in real estate. We just bottle it up in a one-stop shop. So let's do a quick comparison so you can see what I mean. So if you take $100K and drop it into a dividend stock portfolio, you'll make around $3,600 a year, maybe $50K total over a decade, if you're lucky and nothing happens with the economy. Now let's take that same $100K and put it into properly structured rentals, ones that are bought right, ones that are financed right, and ones that are managed end to end. Year one, you're looking at about a $1,200 a month return and a $14,000 return in year one. And over the course of 10 years, you're looking at a closer to $400,000 in a total return when you factor in cash flow, appreciation, tax benefits, and the resident paying down your mortgage. And this is not theory. These are actual numbers from deals we've done. And remember, our investors keep 100% of the profit because there is zero dilution. There's no middleman, no managers, just you and the property. Most people think the risk is buying the wrong property. But for high income earning professionals like you, the real risk is sitting on the sidelines and waiting too long. Every year on the sidelines mean you're missing another 5 to 7% in appreciation. You're missing and losing all the tax advantages of investing in real estate, and you're missing the compounding rent growth. That tech executive I mentioned, once he saw the math, he realized that his 2 years of research and analysis, it had actually cost him about $80,000 in opportunity cost. So within the first year of him working with us, he put $150,000 into 10 rentals. All three produced 30% year one returns, and he didn't lift a finger. We handled the sourcing, we handled the financing, we handled all the rehab, and we found great residents, and we managed the house for the long term. We did everything. He keeps doing what he's great at. He keeps running his company, but now his capital is working as hard as he does. So if your money's parked in a savings account or an index fund and inflation's eating your returns alive, doing nothing is the most expensive decision you can make. Real estate rewards action, especially when it's done for you. So yes, it's absolutely possible to earn 30% plus returns on the properties that you don't have to manage and you don't have to do anything for. And yes, it's possible for you to keep every dollar of upside. But here's what I see happen next. Most people don't ever take the first step because they're just simply overwhelmed by all of the details. They don't know what to buy, they don't know where to buy, and they don't know how to buy and fund it safely without making costly mistakes. That's why I made the next video for you. I'm going to show you how to start investing in real estate even if you know absolutely nothing about it. And I'm going to show you how to get your first cash flowing property in 90 days or less. So click right here to watch it now. And trust me, if you're ready to stop letting your money work at half speed, you do not want to miss this next piece.